requesting information on the VA loan product. Combined here, we have over 40 years worth of lending experience. Want to hit on a couple of the key points that we know a lot of our borrowers have had with regard to everything from frequently asked questions to the steps that are required as far as getting a VA loan. So what we're going to do is take some time today, more of an informal situation, to go over some of the key points that we think might help you as a VA loan buyer. So Scott, if you want to kick it off.
Yeah, well, Jason, I think there's a lot of debate out there. Some people wonder, how do I specifically qualify for a VA loan? What are the steps involved? Do I qualify? When do I qualify? I guess we're hoping to really clear that up for people out there. And maybe you can kind of help out and see who qualifies and how they can qualify.
Yeah, completely. And the way we broke this down is to hit on a lot of the frequently asked questions that folks have. Again, just things that we've heard on the day-to-day basis, and more importantly, then go down specifically what the actual steps are. So if you want to start with some of the questions that you hear, that'd be great.
Sure. I guess who specifically is eligible for a VA loan? Andrea.
Well, Scott, there's several ways you can get eligibility for the loan. The first is if you are 2 years active duty, or if you were honorably discharged after 2 years of active duty. If you are a reservist and you've been in the reserves for 6 years, you're also eligible. And if you have been captured as a prisoner of war and were held for 90 days, you're eligible. In some circumstances, the spouses of a veteran may also be eligible, and those are really kind of the exceptions to the rule. So we always encourage you to talk to your anti-max specialist to find out, based on your specific circumstances, if you are eligible.
Sure.
So basically we're talking about some of America's finest here. Glad that we can actually help them out for all the duties they've done for us. So
that's
great.
One of the things, honestly, about the VA loan that we love. There's a great degree of benefits that are there, attributable again to the folks that are our veterans. The benefits of this program are fantastic, and that's actually one thing we want to talk about as well, is what makes us different than the other loans.
Exactly.
Well, the biggest difference on a VA loan is it's one of the few products still out there that you can do truly with no money down. And it has been the longest standing no money down product in the industry. They were the first to put it on the street, and they'll probably be the last to take it away, because truly they are there to help our veterans in obtaining a home. There also are differences in the mortgage insurance. With a VA loan, you don't have mortgage insurance, but instead pay a funding fee, and that is different depending on whether or not you have had any disabilities while you were serving, or how you were discharged. And basically, VA really just wants to make sure that you're not getting in over your heads. They're really there to protect you and make sure that, unlike other loans where we just look at your long-term obligations, they want to know that based on all of your family's needs, including child care, that you are truly going to be comfortable once we do put you into this home.
Completely. That is the one thing about VA. There's another type of loan program that you may have even requested information from us about, USDA, which is a zero down program. But the big benefit of the VA loan is there's no geographic restriction, there's no income restrictions. To a great degree, if you're a veteran and you have, as Andrea just mentioned, regardless if it's peacetime, wartime, active, reserve, or what have you, it's just a fantastic program to take advantage of due to the benefits that are there. So one of the things we wanted to talk about again was the eligibility regarding homes, as far as what homes are eligible, good, bad, ugly. What can you tell us about that?
And most likely, every type of home is eligible for this program. We're talking condos, we're talking single-family homes, primaries.
Sure. Manufactured housing.
Yeah. But specifically, are there any types that are not?
Well, one of the things we were actually talking about earlier on another borrower is a lot of it really has to do with safety. More so than anything. So as long as it's a safe home, if it's a functional home, if it's a full four-season home, those are some of the key things. Anything else you want to add on that from our conversation before?
We're looking at safety from the point of view that an appraiser would determine it.
Right.
We're not looking at a full home inspection, but if something obviously is structurally wrong, or if there is an impending safety issue, we really just want to make sure, knowing that you're coming into this home with no money down, that you're not going to have any major expenses in the first couple of years of home ownership of this home. So VA is about putting the roof over your head, not taking it away.
Right. And that is one of the key points, just on that same sense, is, for example, condos. And we run into this both with VA as well as FHA, but there is an approval process that is necessary for condos. So, and that has more to do with the fact that there's an external or an additional group that's involved in a condominium, like the condominium association, the management company and such. So, to a great degree, another key factor is making certain that the financial side of the condo complex is stable, and there's not a significantly high volume of delinquencies, or even a significantly high volume of investors, more so than owner-occupieds. And that has more to do with the fact that if things do deteriorate and there are a lot of investors in a property versus, or in a condo complex versus folks that actually live there as their own home, the investors are going to take a different view than somebody if it's their actual house. So it's just a key point too. Condos have an approval process that's important to be a part of as well.
While you're talking about occupancy, that is one of the key things we don't want to skip with VA loans. VA does require you to live in the property, or for your intention to be to live in the property within 60 days. Now, obviously, if you're on active duty and you're away, your spouse can satisfy that requirement for you. And we also know that the VA will make an exception and do a waiver if there's a particular circumstance that's going to require you to be working away from the home, but would occupy within the first year. So they do have some leniency that you don't have with others, but you definitely have to intend to occupy this property.
Yeah, and that's a great point actually, because especially with folks on our active duty or they're going from one base to another, the military family lifestyle is obviously one that often, commonly something that often is a moving process. So that being said, you want to be careful of, again, where you're looking to ultimately land, but there is again a lot of variance and a lot of flexibility with the VA loan. So how about just getting down to the actual steps as far as what's necessary to get a VA loan?
Yeah.
Let's dig into that.
I guess from the borrower standpoint, one of the things that people tend to get a little stressed out about might be what sort of documentation is needed. Mm-hmm. Can you maybe speak to what sort of specific documents are needed to obtain a VA loan?
Well, sure, Scotty. You know, VA is very much like any other program in terms of documentations. There are two things that are really different. And one is that you'd need to produce your DD-214, which is your discharge paper from the military to prove you were honorably discharged. And from that, we would get your certificate of eligibility. And the certificate of eligibility is going to tell us whether you've used your VA financing before, whether any part of it is still tied up in another property, or whether you have full access to use it in this purchase. Right. So that's a very important first step, and sometimes that does take time. We do have the ability to request that online, so if we have the DD-214, we can go ahead and take care of that for you.
One thing real quick that a lot of people ask too is when you're looking at your paperwork, the VA entitlement is basically the figure that is going to allow us to get you into a home ultimately for zero down. And we can talk a little bit about that because this is also, we should say, within conforming limits. So this is within a 417, as of today, and this is late 2011, a $417,000 single-family home or less. You do have the ability to go above that if you're in a high-cost area or a home that's more expensive than that. And the reason being is VA understands that, again, you have folks at different levels. This isn't, more importantly, a first-time home buyer program. We have folks who have used these
Absolutely.
5-6 times throughout their life. One of the things you can also do, and we will not bore you with the details right now on the message, on the video, but you can go higher than that. We've had folks that buy homes that are $600,000. Basically what ends up happening in a nutshell is anything over that conforming limit, you typically have to put down 25%. So if you're looking for a $517,000 house, so it's $100,000 over the conforming limit, that's $100,000 that's over that, you'd have to put $25,000 down. $25,000 down on a $517,000 home is 5% down, so you look at it in the grand scheme of things, it's still a very low down payment for folks that are even outside of a conforming limit. So just a key thing, but one thing to be assured of is when you see your VA entitlement figure, it doesn't mean that you can borrow a loan for $37,000. It just means that's what the equivalent is for a home as far as your down payment. So just want to jump on that. So how about the actual guts of the loan itself, the four groupings of documentation that's needed?
Sure. Well, when we get into any kind of loan documentation, there's 4 areas we cover. We look at your credit, we look at your income, your assets, and the property. And Scotty, would you like to talk to us a bit about what we're looking for in credit on a VA borrower?
Yeah, typically credit scores, we're looking for 640 and above. That's well within what most loans are these days. So it is decent credit, but it's at the same time there is some tolerance for some people that might have some issues out there.
Sure.
Yeah. Definitely, I think VA is one of the more flexible of the programs on the street in a lot of ways, and credit is certainly one of them. Jason, tell us a little bit about what we need for income documents when we're doing a VA loan, or any loan for that matter.
Sure. Income docs, and I have to preface with all these things that we're mentioning right now too. First and foremost, if you have any questions, feel free to reach right out to us, because many times folks don't fit right within the box of what they expect. And this is a perfect example. On the income documentation side, it's a whole slew of different groups: self-employed folks, people that have been in the military for their whole life, folks that were in the military 15 years ago and now they're a W-2 wage earner. So in a general sense, what we need to do on the income side of documentation is we need to get a history of where you've been working for the last 2 years. We then need to get some income documentation that's relative to what type of work you've been doing. For example, if you are self-employed and you've been self-employed, we'll typically need 2 years worth of your taxes. If you're not self-employed, you're generally going to need a couple years worth of W-2s, generally going to need a month's worth of your pay stubs. So when we look at these things, income documentation in particular, and before I get too far, also VA disability, VA income, that sort of thing as well. So we'll need the paperwork that's specific to that as far as how much you're earning. So again, just to sort of recap, self-employed, typically 2 years worth of taxes. Non-self-employed, typically 2 years worth of W-2s, month worth of pay stubs. We're looking for stability. We're looking for how much money you have coming into your house versus how much you have going out debt-wise. So we as lenders calculate a debt ratio, which again means how heavy are you debt-wise. And then lastly, VA has a part that's called the residual ratio. And the residual ratio has more to do with the fact that we take a look at the whole situation holistically. Kids, utilities, square footage of the house, everything soup to nuts, and the normal fees and debts that you have on a normal monthly basis and what it takes to run the house. So we run you by that ratio as well. But the key part is just making sure we're looking for stability. We're looking for someone who's not very heavy debt-wise. And then more importantly, there is still a lot of flexibility with VA. So if you even have concerns in that respect, just ask us. So what about next step assets? Can you tell us a little bit more about that?
Well, sure. Well, since it's a 100% finance program, there's not usually a lot of assets we need to be concerned with. But the assets that you might need for closing costs and your prepaid expenses could come from a number of sources. You're obviously eligible to receive a gift from a family member or a relationship that we can document. You also could get credit from the seller towards your closing costs. So VA is one of those products that you truly can go in and actually get money back at closing based on how much of a deposit you did up front.
Right.
And that's always kind of a kick to be at the closing table when someone's getting some money back.
Yeah, I had a closing last Thursday. And basically the whole scoop was an individual put the home under contract, put a $500 deposit down to buy the home. Seller ended up paying all the closing costs.
Sure.
So literally when they went to the closing table, they ended up getting $251 back from their $500 deposit. So it was
First dinner at the home right there.
It was great.
Nice.
It was great, and they were so excited about it. And it was it's just something that a lot of people don't realize. But that's also one of the real big reasons why you're doing what you're doing right now, and you're investigating and researching this first. Because more importantly, the reason why that was able to happen is we had a joint meeting with the borrower, ourselves, and then the real estate agent, so that we made certain that the offer that they're putting on the table is actually going to take into account what they really need to have happen. So we've had other situations where they go the other way, and then they end up having to need more money to closing than they expected. So just the key part. So sorry, the asset's great.
Well, yeah, and you know, it's one of those things that I really admire the VA for, because they've really looked at the big picture for the veteran and see that the veteran doesn't have the benefit of waiting for the market to turn around to sell their home, where, you know, a regular consumer can say, okay, well, if it doesn't sell now, great. Well, if the military moves you, you're going, and you're going now.
Right.
And so you may not have any money in your bank account to pay for those expenses. You haven't had the same amount of time to plan for the move as a regular borrower would. So I think I really commend the VA for allowing them to do it with no money down, understanding the importance of letting that money kind of freely flow from wherever it can come. Truly, I can't think of a source other than borrow it off of a credit card the VA really wouldn't approve of.
Sure.
So,
Plus, there's also lender credits as well. There's
Sure.
situations where we can do what's called premium pricing, and we've had all those situations where we've given a percentage of the loan amount back as well, and it just helps somebody who has a fixed amount that they can spend to get into the home. So another great point there. So then lastly, property, and actually it's a good segue into the next part as far as the next step with regard to inspection and appraisals.
We'll need an inspection and an appraisal typically with these, correct? Okay.
So basically what you're going to look at is, in the standard sense, if you're using a real estate agent, they're going to be working with you with regard to this as well, but you'll generally get an inspection, and the inspection could be a general housing inspection, building inspection as they call. And then also, depending on the particulars, pest inspections, again, water inspection. There's a whole slew of these, but again, these will typically be handled by yourself and your real estate agent. If not, we can obviously add our insight to that. And then an appraisal. So we have an appraisal done on the home. What you generally run into with an appraisal on a VA loan, particularly two things. It is a zero-down loan, so it has to appraise for what the home is that you're buying it for. But specifically with the VA, if the home doesn't appraise for it, you can back out of that loan. You can back out of that home purchase, and that's important to say. It's only with a VA loan that you can do that, and the reason being is a lot of people say, well, if the value doesn't come in, am I at risk with my deposit? And that's, again, not the case with a VA loan. So, but that's the inspection and appraisal. How about all the, so we're talking about collecting all the documentation. You're getting us the DD-214, the certificate of eligibility. We're doing the credit, we're pulling income docs. We're getting the asset documentation as well. We're having the appraisal done. You're doing the inspection. How about the processing side, which is behind the scenes? Let a little more insight into that as far as what that covers.
Sure. Well, there's a lot that goes into the loan that we try to really shelter our consumers from, especially in this day of having just recovered from an economic kind of calamity. And so the amount of paper we collect is greater than ever before, and I've been doing this over 20 years, and I can tell you even back from the beginning of time, we never needed as much as we need today. But we do try to take on as much of that for the veteran as we can, knowing that they're working a full-time job and putting things together in their life trying to make this move. So from the processing side, we basically are going to gather the credit, the income, the asset, and the property information. We're going to review it to see if there are any missing pieces or to see if any of those documents raise an issue with us. I mean, we all know that sometimes there could be some information on a bank statement, like a large deposit, which could require us to need additional information. So as good originators, we want to try to get all of that up front so we don't have to come back to you repeatedly for documentation. Once that process is all done, it's going to go to an underwriter to make sure that it meets all of the Veteran Administration's program guidelines, and then come back to a processor who will let you know if there is anything else that needs to be gathered before we can clear your loan for closing and meet you at the closing table.
Sure. And one thing real quick on the closing, and you guys had your insight on this, but closing as well, this is a key point to be aware of, and more importantly when you're talking to folks like us, obviously you have a little bit of an insight into how we operate, but more importantly, the closing on an average loan in our world typically takes about 3 weeks or so. You really want to be very clear and careful when you ask that question with any lender that you're working with.
Sure.
You want to, we won't use any obviously names, but we have some folks that we're all either have worked for or familiar with where time frames can be 3+ months. And obviously that's 90 to 100 some odd days, and that typically doesn't work well with a purchase unless it's a new construction or something to that degree. So you just want to be careful on the time frame as far as what it's going to take.
To tie that in a kind of a broader sense,
Sure.
In working with your real estate professional, who we can all certainly recommend, some people that we use who are very professional and get the job done, you want to have that open conversation about timelines and how far into the process you are and how far left you have to go. And again, that's kind of where we can help out and say, okay, here's what we're looking at from a time standpoint, so that nobody's left in the dark, everybody's on the same page, and we make the process as smooth as possible.
Completely. And that is such a huge point. Less so now, more so a few years back, but always very important part is the trust and the faith that you have in the team that's around you. And the reason being there is this process can be, we like to joke, like a Disney process where it's Disney World and nice and easy and everyone's happy, or it can be a horrendous process, and that really has to do with the amount of education and the pre-work that's done. And again, kudos to you for requesting this information. So. Really, just to recap it in a real quick sense, as far as getting an approval, you have some documentation that you're going to get, your DD-214, your certificate of eligibility if you have it, we can request it if you don't. We're going to look at pulling your credit, taking an application. You're going to have to provide some income documentation, some asset documentation, and then the rest of it basically just gets filled in. So if you just want to kind of wrap it up here, I think this is a pretty good cover that we had.
Well, yeah, and you know what, I think one thing that we kind of glazed over that I really want to bring to your attention is that, especially if you're a first-time buyer, but always, it's to your benefit to get a pre-approval done. So you're going to provide us with that information, and we're going to get you approved even before you have a house, so that once you do have that house, you can be focused on the negotiation and then focus on the inspections, and really just chunk things off one bite at a time instead of trying to do the whole process at once.
Sure.
So,
such a key point.
Pre-approvals right now, if you don't have one, you're going to be lucky to get in a real estate agent's car, because they're just knowing how many obstacles there are in financing. They really want to know that you're really ready, willing, and able to buy the property if you like it.
Sure, yeah. That is such a key point. And that's another thing too, pre-approval versus pre-qualification. And two things just popped in my head. A, if this is overwhelming to you, again, all it takes is a phone call to us, an email to us, and we'll either be at your table, you can be in our office, or we'll just have a great phone call and get this all taken care of. But more importantly, pre-qualifications versus pre-approvals. A lot of people ask what the difference is. Pre-approval is when you give all the documentation and we know that you're real and ready to go, and you provided to us what you told us on the phone or in person. Pre-qualification is one in which you just tell us the information and you don't provide it. And as Andrew was just saying with regard to the, I guess it's the seriousness that your offer will be looked upon with, or your realtor will, how serious they will think you are involved in this will have to do with how much time you're putting involved in it. So as much as possibly I can suggest, get pre-approved versus pre-qualified. Take the time, get the documentation, and get it rolling. So,
especially in today's lending world where the internet is such a big part of what we do.
Yes.
A lot of people will have a letter. What the specifics of that letter say is very important. I mean, you can have letterhead and it says, I'm ready to buy a home from
Right.
John Smith Mortgage Company.
Right.
But, it's nice to know that the steps have been taken care of so that you're a strong borrower, and that can make a difference on any offer that you submit through the realtor. If they know that you're a strong borrower, they might put precedence over your actual submission over somebody else's who might not have that paperwork.
Yeah.
So
Yeah.
it's kind of a key point for borrowers to know.
It's so true. Yeah, it's so true. And that's such a good point because, again, online, you pull these things up, and again, truly, many of them aren't worth the paper they're not written on, or that they are written on, depending if you print it up. But that being said, it is a key point when you're getting there, especially when you're looking to put an offer in, because in this environment that we have, so many homes are on the market. And a realtor is going to be very, very careful of what they put on paper for you, or even just if you're doing it directly. So that's a scoop. I mean, any questions, again, feel free to reach back out to us directly. We'd love to help you out. A lot of experience, and we'll again, as much as we can, get you into a Disney World process of getting your approval done. And welcome to taking the first step to buying your new home.